The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. Thanks for joining our webinar today, How to Get Paid on Time Every Time. My name is Shannon Richardson, and I'm the marketing lead for our small business solutions here at Sage. Our speaker today is Gayatri Wood. She's worked as a marketing manager and marketing educational specialist for a range of businesses. She loves helping businesses connect with their audiences and see them excel. She's hosted hundreds of webinars to help business owners learn ways they can grow their business, and we're very happy to have her here today. Just a little bit of housekeeping. If you have any questions, please put them into the question box and we'll answer them at the end of the presentation. We'll also be sending through the webinar recording as well as the free handout, the Sage Canada Guide to Collecting Customer Payments, in the next day or two, so be on the lookout for that. Now I will hand things over to Gayatri.
Thank you so much, Shannon, and thank you so much to everyone that's joined us today. Just to follow on from Shannon's housekeeping as well, if you do have any other applications running in the background, your email, anything else, it is advisable to shut them down because it can interfere with today's broadcast, and we'd love you to get the most out of it. And please do pop through those questions into the question panel, because I really, part of my favourite part of this is answering those at the end. So I would love to answer as many of those as possible. So late payments are the biggest business killer. Tens of thousands of businesses fail each year because of cash flow issues, and most operational businesses have to deal with bridging cash flow due to payments coming in late. On average, it costs businesses around 15 days every year chasing these payments. Today, we're going to have a look at some ways that we can make you get paid on time every time. So the first is around shortening your cash flow cycle. Next is around how you communicate your pricing and your payment terms, not only to your customers, but also within your team as well. Working with the right customers from the outset, how you can make it really easy, some awesome pieces of technology and automation to do so, how Sage can help you specifically, and of course, any questions. So as I mentioned, that 15-day stat, I always like business owners to think about, if you did have 15 days, what would you like to be doing what would you like to be doing in your business? It's definitely not chasing payments. I'm sure would not come top of that list, or probably on that list at all. Of course, there are a lot of reasons that businesses do pay late. They may have mislaid the paper invoice or missed you off their payment run, just simple human error. I'm sure we've all done it at some point. They could have extended their payment terms themselves without consulting you. Could be something, an internal policy that they're doing. They could have a poor cash flow situation, so they may be trying to, just hold on to that payment and that money in cash as long as they can. Or they could also not understand the value of your product or service, so there could be a lot of hesitancy around paying. Prevention around this can be better than a cure. So I want to start with your cash flow cycle and what you can do. It's important to understand what kind of cycle your business is on. For instance, are you someone that sees cash coming in daily, or are you someone on a seasonal cycle that sees fluctuating sales during winter and summer? What you don't want are lengthy periods of time where your business goes without cash. This can lead to all sorts of problems, from paying your creditors to keeping operations going. First thing to look at is your fees. How do you charge for your product or your service? There's a variety of ways, anything from economy pricing, everyday low price with a focus on low manufacturing or delivery costs, to premium pricing, to versioning, to sandwich pricing. You could be doing competitive pricing, value pricing, and so on. Whatever way you choose to price, you need to have a method and be consistent. To pay you effectively, your customers need to understand your fees. You don't want to be, say, value pricing 1 week and then sandwich pricing or economy pricing the next. Of course, unless you are making a long-term considered change that has to be communicated. By agreeing on a clear pricing structure internally, your fee process becomes more transparent, your team knows how to quote correctly for work, and your customers understand the charges they see on your invoices. Your pricing structure needs to factor in the value that you're also bringing to your client. I see a lot of businesses price their product or service based on thinking if they're cheaper, they'll win more work. It normally doesn't work like that long term. It can be a fast race to the bottom and it can really impact your cash flow. It could be a good short-term strategy though. Ensure alongside taking into account certain key factors of your product or service, tracking how much competitors are charging, and understanding the relationship between quality and price, etc. You're also looking at what value you provide. I'll position it this way: just because something might take you 10 minutes to do doesn't mean you should charge 10 minutes of your time. How long did you practice or train for it to take that 10 minutes? What time did you save your customer? That's where the value lies. With an agreed pricing structure, you set the foundations for efficient payment, but you'll only achieve this efficiency if you communicate this pricing and what they receive for it as clearly as possible to your customers. And this is through all channels. So this includes, where appropriate, things like your website, your marketing materials, your physical store if you have one, your proposals, your engagement letters, and so on. Also, make it as simple as possible. The more complex and convoluted your pricing looks to a potential customer, the less likely it is they will understand it. I'm sure we can all remember a time we've been boggled or confused by someone's pricing. Most times you don't end up buying because of that confusion. If you make your prices clear in whatever format you share them with your customers, if applicable, have those prices up front in your engagement letter once they've signed up. Talk to customers about price as well. It's good to have your pricing laid out in writing, but talk to customers about this price point too, how you got to it, and ensure they understand what they're paying for. Once prices have been communicated, explain how they pay you as well and what's expected. Asking for deposits before you start work is especially important for projects or services that are lengthy or high cost. Ask for those deposits and look to get paid in instalments throughout the project rather than leaving a big lump sum at the end. This helps you fund the project and pay your staff costs throughout, and also helps mitigate the customer not forecasting their costs properly and being able to pay the lump sum on delivery, and you being left with a rather lengthy invoice that's very past due payment. One of the quickest and easiest things you can do to improve your cash flow is to reduce your payment terms. More than a third of businesses now require payment within a week. You should do the same, if possible, of course. Everyone may not pay on time, but it's still a lot quicker than waiting for delayed payment on a 28-day payment cycle, especially if you have regular monthly bills to cover. Have a look at your procedures around receiving payments as well. If you pre-chase key invoices and build relationships with the purchase departments, ask for things like: who handles your invoices? Who makes your payments? Who do I contact if there are any issues? That way you know exactly who to speak to if the situation arises and you're not having to find out that information at the time. Also have a written credit note control procedure and stick to it. What do you do if you don't receive payment? What happens after a week, 14 days, or 28 days? Does your team know this as well? Make sure it's documented and articulated really well. And if you do have outstanding payments, make sure you chase them as quickly as possible. And this is part of your procedure too. Having a look at communicating your pricing and payment terms now, not only do your customers have to be clear on your pricing and procedures, your team do as well. Share with your team how you got to those prices that you charge and the cost to the business of doing work for less or for free. If your team doesn't know, they can't be your allies in this. If they do know and there's an understanding across the business of why you charge what you do, they're going to become your allies in enforcing it, and they're much less likely to let those sneaky requests fly that come in from certain customers time to time. You know, that oh, can I just pay a little bit late, or could you just make this change for me? We all do get them. When you bring on any customer, ensure not only your pricing and procedures is upfront, but your payment terms, payment methods, and what happens if they're late. Having those conversations early at the start of your relationship, even before they're a customer, makes it much easier if you have to have a difficult conversation later or chase payments. It may seem obvious to you, but make sure customers know what ways they can pay you. What is your preferred method of payment, and does that take a while to reach you? Especially if you are taking international payments, make sure an invoice that they receive isn't the first time they know this information or find it out. The shorter the payment terms, as we've mentioned before, the quicker you get paid. If there's one thing you can take away from today, and I'll say it time and time again, it's a way to do this as soon as possible to your business and see immediate effect. Make sure you've also formed a relationship between who deals with your receivables and who will be paying them. And I do stress relationship here, the foundation for that communication between the two. It makes it much easier to communicate, get updates, and chase payments if a relationship is formed. Go in and meet them, take them for a coffee even, or at the very least a video or phone call. Once a relationship is formed, it's a lot harder to put your invoice to the bottom of the pile once you can attach a person to it. Unless you're one of the very, very lucky ones, we'll all have to do this at some point. Some key points are to do it immediately. Could be a polite personalized email or a quick phone call, but be proactive about chasing the debt. I know a lot of us do get a slight hesitancy around it. Maybe you don't want to, put pressure on your customer or put pressure on that relationship. But the easier and the quicker you do it, the quicker you're going to receive an outcome as well. And do that without further delay. Also have a look at, is this a one-off or a regular occurrence with this client? Does further action have to be taken? Once that bill has been paid, you need to have a separate conversation with them to see what's going on there if it is a reoccurring issue and what you can do to mitigate this. If customers are still slow with payment, refer them back to your payment terms. Having this in writing gives you a really strong position for enforcing those. And have a look, is there anything you can do to prevent it from happening in future? As it may be that they're struggling with the way that you want to get paid, or is there additional information they need for their accounts payable department that you don't have? Have a look at everything around that and how you can make it easier. Knowing who you're dealing with can provide confidence and comfort in your business dealings. If you're not sure, it's difficult to establish whether credit should be offered and may create problems down the line for you. Small businesses should make sure they know the exact name and trading style of the business. The company may trade under a different name from the people or company who own the business. There are also different types of businesses, which include, amongst others, limited companies, partnerships, sole traders, and so on. It's important to understand what type of business you're dealing with. If it's not a limited company, you should check the name or names and personal addresses of the owner or partners. It may be essential if things don't go to plan down the line. Do your due diligence and your research on your customers. Perhaps you would have seen some header paper and or some company documentation that verifies the information that they've provided you. It's also possible to check their credit details and credit status. If you're using an agency to do this, you should also ask whether the information obtained supports the amount of credit you'd require to cover your invoices. Another check is to take references from other suppliers of the business if you know them as well, and anyone else that has dealt with the company. This gives you a really easy idea from the outset as whether you should be entering into a relationship with your client or not. People that do this, often they go into a relationship and they can make the decision to not actually go into a relationship with that client to avoid having those late payments and those hassles later on. The last section I'm going to cover is ways you can make it really easy for you and your customers to pay you. There's a wide range of tools you can use to make this as straightforward as possible. The first is online invoicing. The easier you make it to pay, the faster customers will settle their bills. Invoicing and payment technology has developed significantly in recent years. There's a wide range of tools you can use to make payment as straightforward as possible. Move to online invoicing if you haven't done already. Aside from cutting down on printing and postage costs and time associated with that, online invoicing also helps to speed up your payment times significantly. To get the most from online invoicing, make your invoices user-friendly. Highlight the price and due date clearly and include all the relevant information the customers need to quickly and simply pay your bill. Some customers have very specific requirements, so ask what they need and make sure that can be seen on the invoice. Don't wait for them to tell you. If you've got regular monthly agreed fees, set up recurring invoices in your accountancy software. Once set up, invoices are raised and emailed out automatically to customers. This does the heavy lifting for you and also gets the customer into the habit of receiving your invoice at the same time each week or month and making the corresponding payment. Knowing when to expect it is actually really helpful for their cash flow too. Many businesses charge fees for late payments. A more positive approach can be to offer a discount for prompt payment. The lure of saving money is a powerful motivator, even if it's just a couple to a few % discount. If you don't want to go down that route, even a simple note can also be really lovely too. A service I use, I get a personalised email. It's just a really nice, simple email from the director of the company saying that the payment's been received, something along the lines of, "Hi Gayatri, just to let you know payment's been received at our end. Thank you for paying promptly, really appreciate it." And then some sort of personal line of what's going on at the time or at the moment, or something he may know about me. And it always makes me smile. It's nice for me as a customer to know that it has been received and marked off. I've not, accidentally done something wrong. And it's a nice touch from to receive, that thank you and that acknowledgement, and personalised as well. Moving on to payments as well from invoicing. I don't know about you, but I do love it when there's an online payment gateway or way to pay an invoice immediately when it gets sent through. It makes it so much easier from the customer's perspective, as they can make a one-click payment there and then, rather than having to log on, set up a transfer, try and copy and paste in details, double check the reference and details, etc., or even worse, potentially get the checkbook out. Psychologically as well, online payment options gives them ability to pay you anytime, anywhere. They're not limited, or they don't have to think about when they can have the time and space to input the necessary information, and it doesn't go onto their to-do list. There's a variety of online payment gateways out there at the moment that can create one-click payments. I definitely suggest you look into it if it's something you're not doing now. Also look at tracking your cash flow and your aged debts too. Using software, you can automatically find out who has or hasn't paid you yet, rather than relying on spreadsheets, someone's knowledge in their head, or bank records. You can get a quick up-to-date position of your debtors, allowing you to monitor your payments and keep an eye on those that are coming up to the deadline or are late, so you can chase them promptly. If you are using some online payment solutions there are even software dashboards that can notify you in real time. Also look at projecting your cash position forward. It's a really good way to highlight any potential seasonal dips or problems ahead of time. If you haven't done this before, I suggest you start by reviewing your business performance over the last 12 months. Look at identifying trends and concerns, and then use these insights to create a consolidated plan going forward. You can create reports in Sage to compare different years, jobs, staff, customers, job types, and much more to make it easy. Really cool thing you can do with that is you can do a customer report. It's a really handy way to see trends in late payments, as is a monthly breakdown as well, to see if there are any crunch points during the year. This gives you a really nice way and really easy way to be able to forecast forward, see if those points are going to happen again, or any customers that you need to keep an eye on. Managing the financial administration of a small business can be time consuming. If you're spending hours of precious project time or time with clients on unprofitable tasks of chasing customers to set up standing orders or chasing up unpaid invoices, then a change of methodology is needed. Using software automation helps to make payment and debt collection far less of a headache. Where there's a payment or credit control process that can be automate it and see the positive impact it has on your payment times and cash flow. Today's smart financial apps give you the ability to automate much of the payment process, from setting up a repeating invoice to now also using AI algorithm that knows when to cash collect and credit control. Many of these tools can be personalized, which allows you to keep things human and personal, maintaining the relationships you spent so long building up. A nice touch to make is to track things are on time, is to sending out a nice personalized reminder. I also get one from a service I use, and it's really simple. All it does is it asks if I'm on track to make payment in the next week, and it's a really nice way to surface any potential issues that the customer may have and iron out anything that you may not know. Maybe they're having a little cash point and they may be a day late and can tell you so, or maybe they want to dispute something on the invoice, it's not coming up to the due date and they're disputing it, then you can iron out any of those issues in advance. To give you an example of technology working together and doing the heavy lifting for you, here's a standard sort of monthly process taking you through from the monthly invoice being issued online, payments being made, a late payment being chased if that occurs, the payment being received at the bank, being reconciled, and reporting. So as you can see, all the software on the right-hand side, from Sage to Stripe, PayPal Pay, Work and Flow, Sage again, and then into reporting software, all interlinks and does all of this heavy lifting for you. So all of this information is nicely shared between these awesome software and technology apps, and it gives you the time freed up and access to the information you need to know if you're getting paid on time and to make crucial decisions around your cash flow. Specifically with invoice payments and Microsoft Outlook payments, with Sage, you can invoice your customers by email and include a Pay Now button that your customers can use to pay with a card with a couple simple clicks. Payments are securely processed online and deposited directly into your bank account. An illustration to the right there for those of you that may not be familiar with this. They take this further with Sage 50 and Microsoft Outlook payments, where amongst other fantastic features, your customers don't even have to leave their invoice to make a payment. I know that Shannon will cover a little bit more about those Sage Business Accounting solutions, but before I hand it back over to her, if you remember anything today, it is businesses that use online accounting software, reduce their payment terms to 7 days or less, and receive payments online, so using that one-click online method, can reduce the time it gets paid by 11 days on average. And that is absolutely phenomenal. So if you are going to do anything and implement anything from today, I suggest that you start with those things. I'm going to hand it back over to Shannon now to talk more specifically about how Sage can help, and specifically Sage Business Accounting Solutions. If you do have any questions, please do keep popping them into the question box. I can see a few have come up and we'll get to those shortly.
Great. Thanks so much, Gayatri. And yes, a lot of the items that you mentioned, especially the ones around automation and payments, both of our Sage solutions can help with that. I know probably most of you on the call are familiar with at least one of our solutions, or perhaps both of them. But we do have our two main solutions. So we've got Sage Business Cloud Accounting. This is our newest solution, and it's 100% browser-based accounting that will help to kind of cover all of your small business accounting needs. Then we also have Sage 50 Cloud, which is our more traditional desktop accounting solutions for businesses with more advanced inventory, payroll, reporting, and project needs. Our Sage 50 Cloud is also a hybrid solution, so it does have the cloud connectivity and the Office 365 integration. And like Gayatri mentioned, both solutions do have the ability to do the online invoicing, adding in that Pay Now button so you can get paid quickly and easily. Both solutions also have bank integrations with the top Canadian banks, so you can receive those payments online. And both solutions really do help to automate those daily repetitive tasks, so it can kind of help free up some of your time so you're not just doing all this bookkeeping. If you ever need any information, please just go to sage.com and click on our small business solutions. You can find out more information. There's phone numbers there if you need to reach out to any of our reps to talk in more detail. And I will hand it back to Gayatri. And so now we're into questions. So I've got a question, Gayatri.
Sure.
Michelle has said, our company has a credit agreement for customers to sign before we allow credit. It states all invoices must be paid within 30 days or interest will accumulate. I've had 3 companies send me their own agreement. It goes against ours with a longer period before they pay, and they refuse to pay within our contract. What do I do?
So negotiate would be a really good point. So understand why they do this. Is it that they just like to pay all invoices across the business at a certain, point or certain point of the month, or by month, or however they're paying? Talk to someone that understands and knows that. Get to the bottom of that, and also look at ways around it. So if they want a longer period, can they maybe do 2 payments? Can they stage a payment, or can they do an advance payment and then a payment on that period? So a little bit of give and take on both sides, I think you should be able to come to some sort of solution there. I know it's hard when you want to keep the contract, but be honest, and also be honest around what headaches it can cause you. I think honesty and being human in these situations, and putting it in a way that another business owner or someone that is in that position can understand, goes a long way.
Great. Next question is, what is the difference between direct debit and direct credit?
So direct debit is normally an electronic withdrawal from a customer's account, whereas direct credit is an electronic deposit into an account, if that makes sense.
Okay. Another question around, what would you recommend as an incentive for clients who pay their balances early? Maybe more specific to businesses that sell product direct to direct individuals.
If you're packaging that product up and shipping it out, I know I've been the recipient of that and seen it work really well for businesses, is something small within that package that you're sending out. So anything from small branded chocolates with a handwritten thank you note, or if they're coming in to collect that, it could be something that you hand over. If it's a client, obviously depending on how much money is crossing paths here, you could scale that up. If it's a quite considerable purchase, find out a little bit about the client, maybe a book voucher, or a voucher for their favorite restaurant, or their favorite bottle of wine. Something like that goes a really long way. It doesn't have to be something massively costly. It could even just be a really nice branded card with a nice thank you note that it's obvious you've gone out of your time to appreciate that. All of that leaves a really nice positive feeling for that customer, and I guarantee 9 times out of 10 they'll keep up that for you as well.
Great. Another one says, we are wanting to start to charge interest on late payments, but are not sure how to get started. Can you get some advice on charging interest for late payments?
Yeah, absolutely. So first off is I think to understand within the business how you want to do that, from what period you want to start charging that, and the procedure leading up to it, in order to make clients aware. So what you don't want to do is have an issue where a client or a customer doesn't know that this is going to happen, or claim to not know. So you want that instilled from the outset. So before they even become a customer, having that talked about. I know a business owner that has a very upfront conversation with clients when he pitches. I'm not saying this is for everyone, but he says at the table, is it your intention to pay me on time? Of course, they're going to say yes. Okay, great. So you're comfortable then if I put in the contract that if you don't pay me on time, I will charge X amount extra. I'm not saying you have to be as outlandish as that, but have a think about how you embed that in the process, and then enforce it as well. I'm not saying you may not have to follow through, but receiving an invoice with that interest charged after you've done the appropriate reminders, you've made sure that that's instilled from the outset, when you've built that relationship, that's been communicated, that generally gets things moving quite fast, or a negotiation happening around how and when they can pay you.
Great. Next question. We have problems with being able to include enough details on the invoicing for customers. They have a lot of terms and conditions that must be on all invoices to ensure we are paid on time and correctly. But there's limits to where it can be put on the invoices. So what would you recommend? Is there another way or any other suggestions?
Did you have a specific Sage response to this, or did you want me to do a general response?
Yeah, I don't know off the top of my head of what we can do. I can reach out to Brooke through email to see how I can help with the kind of the limits on the invoicing. But if you have any other recommendations kind of outside of that, that would be great.
Yeah, definitely. So another way is an attachment with those terms and conditions. I do know quite a few businesses that will have the standard invoice, will email that, and will also attach the additional terms and conditions. So you know, the additional information or terms that you require. That can be one way to get around it. It's not entirely automated, but if you are sending that out electronically, it just means that they receive both at the same time. Also means that if there is a lot of information, it's not going to get lost on the invoice, because that is the other issue that you could have, is that important information that they actually need, or the important information around the amount and when they need to pay you can get lost if there is a little bit too much information there. So I'd look at doing that subsidiary to it. I also know that you can do some bespoke email messages alongside it. So that could be another option, that the automatic email message that goes with it. Again, obviously, depending on how much you have to write, you could have something like, "Hi, customer, here is, you know, your invoice attached for such and such. Please see down the line below for the additional terms and conditions." So that could be another way around it as well.
Okay. And there, another question, is there any form of automated payment system for transferring funds from the US to Canada other than credit card, which is not an option for our business?
Automated payment system. I would have to have a look in that. I know that there's a couple I can think of off the top of my head, but I'm not sure whether it's automated, like entirely automated, or automated to what degree. So if you wanted to pop back a little bit more information around exactly how you mean that automation to occur, like, are you just setting up a automatic sort of, you know, once a month, or are you wanting something that's checked off and signed by someone? If you are, there are a couple of options for you there.
Okay. A question: would it be rude to inform the customers who I've spoken to and negotiated with and tried to work within their payment options to no avail to pay upon pickup if they cannot adhere to our contract payment terms?
I don't think so at all. If they're not adhering, if they're, you know, creating a pinch on your cash flow, I think that's very fair. Again, it's just how you communicate that. I would most likely pick up the phone, or when they come in, have a conversation with the appropriate person on their end and just say, "Hey, look, you know, you've missed our payment terms a few times now. I'm really finding it difficult from our end. Just be honest. You know, it's putting a bit of a pinch on me. I've got, you know, my own invoices and bills to pay. From now on, moving forward, I'm going to be asking for payment upon collection of goods," and ask them how they feel about that. And just open up a really honest dialogue. Make sure if you do have any payment terms or conditions that you update it to reflect that as well, so both align with that, and see how you get on. Good luck. I know it's not a nice conversation, but it definitely is an essential one. And again, like I said to a question before, when you add that human element in and you put it in terms that they can relate to, because I'm sure they've received a late payment at some point, it does make that a lot easier and a much nicer conversation to have.
Great, thanks, Gayatri. How do I prevent customers from ignoring overdue charges?
So it depends on how you're sending it to them. I always say pick up the phone. I genuinely have you know, if someone's late, if they're a day late, pick up the phone and have a chat to them. It's harder to ignore a phone call than it is to ignore an email. There are some occasions where everyone's inbox gets a little bit out of control, and you bury your head in the sand, and you could legitimately miss something. But I would say first point of call, pick up that phone. If they are ignoring it, pick it up again, and go back to your credit control policy if you do have one, or have a look at how it can be updated, and have a look at what you can do within that. If it is a particular client, again, just having a conversation with the appropriate person on the other end, and letting them know that this is continually happening, and you can't let it happen again. If it is getting really bad, debt collection is always an avenue if you're wanting to go down it, or ceasing to provide those services to the customer anymore. I do know an agency who did some web development for a client, got the website up, was hosting it, did some further development. The client was quite late paying, so he just took their website offline. I'm not saying you have to be as drastic as that, but that did get things moving quite fast. And his thinking behind it was, well, you haven't paid for it yet, so I'll remove it.
Great. Another question is that in most businesses, whenever a customer gets an invoice from another vendor and the customer paid them a check to mail it and to send it to the vendor, does the vendor send the receipt to the customer regarding they paid it on time?
I think it's a nice thing to do, yeah. If you're receiving checks, I would say have a look at online payments, speed that up so you're not having to deal with that. If that's an option for your business, that would save all of that admin work for you. I think it is always nice, it's certainty. I know, being on the other end, that your payment has been received. It's nice if you can personalize it as well. And also with a check and post, occasionally things can go missing. Again, it just gives them that security that you have got it.
Great. Let's see. How would you approach collecting invoices that are 100+ days overdue?
I would say with this, depends on the amount and how much you're willing to lose or not lose. I'm really sorry to hear that. That's horrible to have to deal with that situation. I'm presuming you've probably tried calling. If visiting isn't an option for you, getting face-to-face and actually having a chat to someone, obviously proportionally weigh that up with how much that invoice is worth to you. Do you really want that payment in? Also offering a payment plan. Obviously payment is an issue for them. Getting to the bottom of why they haven't paid it, which is why a phone call or face-to-face may be good. Are they going through cash flow situations themselves? Therefore, can you agree to a payment plan that means that you are getting in some of the money, and they're able to, it's not crippling their cash flow. If you're wanting to really go down the severe route, debt collection is always an option. Is also, I would just be really mindful, if you are providing any products or services to them, that you cease doing that as well, and you cease that customer relationship until this is sorted out, because that is only going to rack up more owed to you. And also it's not reinforcing your behavior of asking the money if you're going to keep supplying to them as well. So I'd look at some options like that, but just be nice but firm around it. And sometimes even just the threat of going to debt collection, if you have tried everything else and you've tried to come to some agreement with them and some understanding, definitely helps too.
Okay. Another question, I apply service charges to invoices unpaid after 30 days, but these charges are often not paid by the customer. How do I get my customers to pay late charges along with the original invoice amount?
So first off, make sure that they're aware that happens, that occurs. so that they can't, plead ignorance to it. So conversation, any sort of documentation that you require them to sign as soon as they become a customer. You could just do something simple like replying to the sending them, another invoice for the outstanding payment, with a credit note attached for the payment that they've made and the outstanding charge. Again, with it, it's how, is adding that charge getting the payment promptly afterwards? If so, you might argue that just by adding that charge on it, it's actually effectively doing what you need it to do by, bringing that charge in. Or you may say, you know what, I actually need this charge covered because of the, I need to cover the time that it's taken to, make these calls or receive that. So if you are adamant on that, then, have a look at ways that you receive that invoice. So just look at, proportional cost, what money you're getting in, and also how you want that relationship to continue. Because if they are a good customer and simply adding that service charge onto it is making sure that they sort of pay quite promptly after it's due, then you may argue that it's not reason to chase it. So also take that case by case value, because if it's someone really being far too lenient and taking advantage of you there, it would be something good to enforce. But I'd say first point of call is pick up the phone or respond back saying that part of it hasn't been paid.
Okay. Another kind of question along those same lines on someone recently tried to take a client to small claims court for interest owed, but was told at the courthouse that they couldn't file a claim for just interest, even though it was very clearly on the original invoice. Is this correct?
I wouldn't want to speak to something around small claims court. Just I feel need a little bit more context and a little bit more understanding of that particular situation. If you are wanting some further information, I would have a look at your local business lawyer centre or someone of the like that can provide you specific information. Having a look at everything you presented to the small claims court. Maybe it was a nuance or something you missed, or how it was presented, or the information, or whatnot. So I think that would be your best point of call, because I would hate to give you wrong information, not having the full facts.
Yep. And I think maybe this is the last question here. What about asking for a customer deposit?
Yeah, absolutely. Especially if it's a sizable invoice or a lengthy project that you're delivering on. 100% recommend it. A really good way to get buy-in, and also to help your cash flow over the period of time that you're delivering on that product or service as well. Have that conversation. Whether it's a 25% or 50% deposit and the rest is done on completion. I think that's very fair, especially in the circumstances of anything that's lengthy or high value or high cost.
Great. Well, I think that is it right now for questions. Just to let everyone know, I do have some follow-up to a few of you, so please bear with me. I will be emailing you directly on some of those questions and getting back to you on those answers. If anyone else has any other questions, you can also email me and those additional questions, and I can get those answers for you. And other than that, be on the lookout in the next couple of days, because I will be sending out the link to the recording for the webinar as well. Is there any other last comments from you, Gayatri?
Just to say, if you're around on May the 26th, the
Yes.
next webinar will be using the cloud to grow your business. So please do attend, and thank you so much, Shannon, for having me, and all of you wonderful people for listening to me today. I've thoroughly enjoyed myself, and I hope you have a great rest of the day.
Yeah, great. Thanks, Gayatri. Thanks, everyone.